Hi there, welcome to the week ahead with Pivot Trader. Wow, what a market, huh? It's pretty exciting out there, things going nuts. We saw the big pickup in volatility that I've been expecting. The low of the move was broken last week, but we did see some buying pressure come in towards the end of last week. And then in the overnight market this morning, after a 100-point rally on Friday, the S&P has opened down 100 points in the overnight market with all of this geopolitical news coming out about Ukraine, etc. So it is a tough time out there, and it's a tricky situation where things are right now. So I just want to give you a few lines in the sand to give you a sense of what's going on. First of all, the S&P 500 on the weekly, if you have been following this with me, should know the situation where the weekly trend has turned down. That 10-week exponential now below the 20-week simple moving average for the first time in a long time. So that situation is one to be very wary of because that selling pressure can last a long time and it can go a long way when that weekly trend does turn down. But in the very short term, on the daily chart, you can see here that it's after that strong rally on Friday, it actually created a daily buy pivot. The easiest way to explain this, we had last week when I was talking to you, prices were around 43.50 on the Monday. I said the selling pressure should come in around 4,400 to 44.50. If you go back and watch the video, you'll see that. The high in the move was 42.91 during that next day. Then the selling pressure came in and a big sell-off happened, and with the invasion of Ukraine, and that low from a month ago was broken. Lots of stoppies going off there, but then the buying pressure came in, and we've seen, what I call that false break of that low. So the false break being when that level got broken, but then it's turned back up and gone above that level. So that's what I mean by false break. It looks like it's broken down, but then nope, it turns around and all of a sudden it's going up. And we've got that daily buy pivot. So you've got the low in the move there, the high of that bar. We need to see it close above the high of that bar. We saw that on Friday. So we have a daily buy pivot. So if you had the guts, it's actually at a point on Monday morning where you should be a buyer. But boy, you'd run away if it went back down below the low from last week, around 4,100 in that S&P. So that actually is the situation on a daily chart, saying that this is a buy. But your stop loss has to be 180 points, which is quite a long way. But that's just how volatile the market is right now. If you were to buy here, your stop loss would have to be below here, below 4,100. But that is the situation on the daily chart. So that's why this is so interesting. A short squeeze can develop from here. I still am bearish, therefore I think it will eventually turn back down again. But just that situation on the daily chart is actually bullish, technically. But I'm inclined to respect this weekly chart, which is bearish, and will remain bearish until we see that weekly buy pivot, at least. So the week's high last week was 43.90 or 43.91. So if we were to see prices rally over this week and close above 43.91, like that, close up there, create the weekly buy pivot, then things are looking a bit more bullish. But if that doesn't happen, if prices turn back down and this weekly downtrend is continuing And if it busts below last week's low, boy, below there's just a lot that can happen. It can look pretty nasty. And, for sure, after you get that big clear out, that could be a great point to have a trading buy. But you just have to be aware that the momentum is down. The weekly charts are negative still. And, back below last week's low, and there's going to be lots of stoppies. I've very low level of doubt on that. That things could look terrible. That's why if you're bullish and willing to trade those short-term charts, so on a daily chart you're saying it's looking bullish and it's in an area where it should bounce, that could be the trade that's right. But boy, you're running away if it was to turn down below that low, below 4,100 in that S&P. So it's a very tricky situation. I would say that the highest probability in the past in this sort of situation is that it would rally, even if ultimately it's going to turn back down again at some point. It's just a point where the short squeeze should sort of happen to get people bullish again and shake out the shorts. So that's what I'd usually expect to happen, but very aware in this current situation, geopolitical risks and the Fed about to raise rates possibly by 50 basis points. It's a pretty hairy situation to be stepping up and buying it. I certainly don't have the guts to do it, but it'll be interesting to see how this plays out, whether those daily charts do prove to be prescient about a short squeeze. So that really is it for the S&P. Really tricky. I'm not sticking my neck out too much this week. Short-term bullish, very short-term bullish, but can look absolutely tragic if it turns back down. So that's what I want you to take away from my comments this week. And I just want to follow up on gold. I was talking with you last week about the fact that prices had broken out above the point of control, the midpoint of this range that we've been stuck in for the last year and a half, that being the correction from the all-time high. So there's the all-time high up there, and there's the low of the correction there, which happened in early 2021, and I'm making all the calculations off that. So then I've got the buy zone area there and the sell zone area there. And I just want you to note, when prices were struggling down the bottom of this range, we had a rally that hit the point of control exactly, you can see there, and then sold off again down into that buy zone area. Turned up, and then last week I was saying, wow, we're breaking up above that point of control, which gives targets to the sell zone of the range. And the bottom of the sell zone was 1972.8, and the high last week was 1974.40. So pretty much hitting that sell zone area bang on, and then the selling pressure did come in. And prices fell all the way back to really close to that point of control. So I just want you to note that, just so you can, get a bit of a sense of how important these levels are and how good they are at picking out the areas where I'd expect reversals to occur and for prices to head back to the point of control. And then on the top side, that sell zone area is where I expect there to be selling pressure, which can push prices again back to that point of control. And as you follow along, we should see multiple occurrences of this sort of thing happening. And last week, good example of prices just hitting that sell zone, but the selling pressure is still there. But the chart is still constructive for more upside. If you look at the weekly bars, you can see still marching higher. the 10-week exponential above that 20-week simple. So, that trend has been up since November last year. So even though it's, all over the place, you're noticing that weekly trend being up and holding in that state of being up is positive. So yeah, we found buying support after that sell-off back near the point of control, which is a good sign. So for now, price is still looking good for more upside, and it'll be interesting to see what happens if it can get back above that 1975 region soon. But all looking pretty good in gold. All right, look, that's enough for this week. It's a very interesting market out there. Be careful, that's for sure. Looking at that short term in the S&P, potentially going to build into a bit of a short squeeze, which I think would surprise everyone. But I'm very aware that if that doesn't hold and that weekly downtrend reasserts itself, it can look pretty bad pretty quickly. So you do have to also be very aware of that. All right, cheers. I'll come back with more next week.